coming out, you're double counting that 6,000. So if you've got 2 bank statements of his and you didn't see any of the funds come out, you're using an older bank statement. Now, you could use that to your advantage, but you really want to understand what you're doing. Because if someone tells me they're saving up money, I'll use it to my advantage. Well, how about if you use that? Because I would like to drink water.
That was looking good. Where you had it was looking good.
Shh. You're interrupting my class. So, if you got someone that's saving money, that's a good way to make him look like he's got enough funds. But understand, when you're talking to the client and when you hand it in, you're actually short money. So at some point in time, that underwriter is going to catch it. When you get your approval, it's going to say verify assets to close and it may have a number on it. So don't not know what you're looking at. Make sure you look at the bank statement. I pulled out a couple of sample bank statements for us to review and what we're looking for and what we're not looking for. It's a lot of things that are important in the bank statement. It's on the 1003. It's so simple. Oh yeah, I'm going to put TD Bank. Here's the account number and put the amount. But you want to look at these bank statements before they go in, especially if there's an issue and if you have them ahead of time. Okay. Just to backtrack a little bit, the procedure is people sign their stuff. They're sending you the docs. Once they sign it and it comes back, we're now packaging everything up to go to Ashley to get into underwriting. We go to underwriting first as opposed to processing, and then they process backwards. That's a good thing, but it's also a bad thing.
So you go to underwriting before processing, because you want to make sure that everything's in order before you even get to processing.
Yeah, you could say that's the premise. But as we've discussed before, that's a double-edged sword. I'll give you an example. Matter of fact, which one you want to tell me why it's a good thing or a bad thing? Pick your topic. Why going into underwriting first is good or bad? Each one is picked up. You think it's better or worse? Or just give me a bad reason why going to underwriting isn't so good, or a good reason.
And not all the forms are in. Not all the forms are in.
Correct.
So the underwriter has no way to decide if it's good or not.
We have to make sure we have tax returns, pay stubs, bank statements in, but we could be short funds at that point, which would be a condition on there. What do you think, Kev? Now you haven't. To be fair to them three,
I wouldn't send anything to the underwriter first. I mean, that's just the thing.
We're always going to the underwriter first. It's not going to processing. It goes right to underwriting. When Ashley puts it in, it's being underwritten. That's where your approval comes from.
Without all the documents, though, so?
No. With our documents, but without it being processed.
Oh. Okay.
Oops, I almost
Maybe
covered
somebody's
that.
a good question.
They've never seen it any other way and they're new, but I wanted to see if they would pick that up.
Who does the
Two
underwriting?
things, underwriters.
But I mean, is it always, do you use the same underwriter or?
Well, we have 5.
Oh, okay.
So it could be hit by any one of them, whichever one is up. They do it on a rolling basis so that one person doesn't get too many deals. And you're not stuck with one underwriter if you kind of, have a little issue with some of the things that they look at. So a good reason why you want to go to underwriting is to make sure the deal is due. That's a good thing. So it's approved. I know a deal is good, but you guys are newer. You're not really going to know, but you will. You really do know. When it goes underwriting first, you can print out a quick approval, even though it's not a commitment, and it kind of gets everybody off your tail. Attorneys now can start ordering title work and get that flow moving quicker, and the processor knows what to get. The negativity about it is the only one who really knows the file is you, as opposed to previous to the last few years, the file would go into processing. You didn't want your underwriters looking at something that didn't make sense. So the process was really a mini underwriter and knew all of the guidelines. So all my processors really ultimately matured up and became underwriters because they had to know everything. If they submitted a bank statement with a large deposit and didn't have it commented, they would get chastised for it. Also, when the approval comes back, sometimes they miss it. How many times have we had approvals and they're looking for an ID or they're looking for a W-2 and they're like, I handed everything and I couldn't get it open without it. How could you tell me it's not there? You got to look for it. Okay, so that's my issue with not using paper and using paper, but they would lose it anyway. In the old days, we'd go, open up to page 12 right behind you. See, oh, I missed it. It was stuck to another page because you're making copies. So, in essence, going to underwriting first means that you're the only one who knows the file. Ashley doesn't know your file. She just knows the paperwork we gave her to submit in. She doesn't know if the bank statement's good. She doesn't know if the bank statement's bad. She doesn't know if the tax returns are good or if the tax returns are bad. She doesn't know if the income is good or if the income is bad. Her job is just to put it in corporate form, get it in, and get it over, because opening is going to go, you're missing something, I can't go to underwriting. It's not that something is wrong, it's just that that piece of paper is missing, okay? Underwriting will determine it. So normally, because of the economies of scale of pay, openers being here, processors being here, underwriters being here, you didn't want the underwriter wasting time on things. But they've rolled it and said, well, why do we want to waste time processing it? You can look at that as an expense, okay? Process the file for 3 weeks, get into underwriting and go, yeah, this don't work. This one item it's not going to qualify for whatever the reason is. So there's good and bad on both sides. I can, if I was in a debating class, I could take both positions and make it work. I always like taking both sides of the position. This way you figure out where you want to go with it.
Like to be the winner.
I like that. I'll pick either side. No, I'm just the type. You pick a side, and I'll take the other side. So basically, what we're doing here is we're listing all the statements that are pertinent to the file. I implore you, if you got statements that don't work, don't use it on your file. Look at it ahead of time, or then negate it and say we're going to take it off. Especially, a lot of times you don't want to use business statements. Sometimes you have to, if that's where they're using their money from. And I'm saying you need a letter for it. So those are the stupid little things we're going to go through. But if you've got a bank statement that shows a lot of cash or a lot of deposits, and your underwriters are the type that are picking and they want a copy of every deposit, I'm like, but that's a business statement. I'm not gonna. He doesn't have a copy of the check, right? Not everyone does it like my stepfather was anal. Every deposit we made, he made a copy of the deposit, made a copy of the check of what it was for. The invoice said it was what, and we had it in a folder. Most people don't do that with their business. Okay, so those are all the crazy little things that go involved. Each item is very detailed, and that's what they're looking for. They're going to look for NSF checks. They're going to look for large deposits. They're going to look for cash deposits. All the different things that could alter a file. Right? If you had a large deposit, did you borrow money? Where did it come from? That's where all that comes from. Not to mention now, which all of us have taken the money laundering aspect of it, but the government wants to crack down on money laundering. So all those things come into play. So with that, let's take a look at a regular bank statement. Okay. 1, 2, 3, 4, 5. You can push them around to them. Okay, I've whited out the pertinent information to protect the innocent. This one should say June to September 20th. And the beginning balance is $646. And the ending balance in September, and this is a fairly new loan, says $333. I'm looking at the deposits, and they're only $200, and withdrawals is $500. So I know this isn't a bank account that I'm really using to show the assets to close. But let's take a look at it anyway. Now, first thing you want to note is on every bank statement, look at the bottom and make sure how many pages are part of that bank statement. Do me a favor, close that door. Make sure how many pages are part of the bank statement. Because if it says 1 of 4, 1 of 8, 1 of 9, even if you've got a page which is 2 that has nothing to do with the statement itself in terms of money, if you don't supply it, that's going to be a condition. And they're going to put, please supply June bank statement. Okay? That's a little meeting that we had last week with operations in NOSA, and I'm like, you know, underwriters are putting down, I need ID, or I need a bank statement. But I know I submitted it because you couldn't open it without it. And she goes, well, we're trying, and you have to really appreciate this. So let me backtrack. These are the things they don't teach you in the book. That's why I got to tell you. All right, so whenever we did an audit in the old days, auditor would come in from the state, take a look at the book. There'd be a first meeting interview, tell us what they expect, tell us what they need. New Jersey was pretty nice. New York was different. They sent you a list that you had to put together. But with New Jersey, so to speak, and even with HUD, initially they would come in and they want to look at your book. You used to have a log book that had loan number, information, data came in, data was signed, data was approved, data closed, and they would go through the book and they would tell you depending on how many files you had. So if you closed 300 files that year, they would pull at least 30% at least and give you the names of the files that they want. And they would say, we're going to come back in on the 25th, let's say it's 3 weeks later. We would then pull the files out of storage, clean them, okay? All the junk on the left we took out, and the only thing we actually included was the actual application, the actual disclosures, the dates, the approval, the commitment, the closing docs. That's all that was in there. We didn't put the notes in there. Our personal notes and things that we didn't use as part of that package, we left out. If something popped up and they would ask us a question, you know, we see that this was approved, but blah, 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 but it doesn't match. Hold on. We would go into the other folder. Oh, look, here was a second disclosure that was wrong, and that's why the dates are off. And go, oh, okay. So we had an opportunity to deliver what we wanted to deliver. Now, everything's being done through Encompass, and Encompass is kind of tied into the CFPB and your banking departments. So whenever we're doing audit now, and remember, back in the day, we couldn't touch verifications of employment, DOEs. They never touched it. The processors had to mail it. We would actually get the file back and take the envelope and staple it to the back of the folder because they wanted to prove that there was no fraud. So I would have a whole system showing, look, verification deposit from so-and-so bank. Here's the bank envelope, stapled to the folder. So all the things that we worry about today, fraud, you know, change docs, fraud from us either filling it out or someone creating fake documents, we would have things in the folder that would prove it. Now, how do we protect it? Everything is date and timestamp. So when we submit something in, it's all date and timestamp. Every time we do a document, every time they sign something, it's all date and timestamp. All of the notes within Encompass, not our emails, but the Encompass notes, when we get our notifications from the underwriter saying, blah, 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 and it says your document has been approved, look into the system, and you get that little blurb, that's coming out of Encompass. So all of those things are date and timestamp. So when we turn around and submit that file for an audit, that's all in there. We can purge what's junk, but everything else that's in that file is date and timestamp. The notes are in it. So the notes of Encompass are still in there. So they don't want any details like bank statement has 50,000 cash. We need an explanation on proof. We don't want to make that a statement because if we just end up pulling it for whatever reason, they're going to go, what happened with the statement? They can question what was in and what wasn't in. Not like we're perpetrating any fraud, but this is what's needed to go in. You know, it's commonplace that if you got a bank statement that you can't use because you got assets, we pull it and then you got to find other assets to close along. If when we send it out, they get to see it all, including the notes. So these are the things that will say bank statement for June through July missing, or give me a bank statement. Well, we already know we have it. Tell me you're missing page 4. But they don't want to say we're missing page 4. They just want to leave it blank and then deal with that in a conversation basis. That's why you'll see us going. And I'm like, well, it would have been nice if you told us that. I had to wait 8 months to say, look, your people are asking for stuff that we know is in a folder. All right? And then I get the explanation. Well, we really don't want to say certain things because it all gets viewed. So when you see those things, don't get mad anymore. Now I understand why it's being done. It's a matter of we could have known sooner and we could have worked through it. But that's why we have a young lady who helps us get docs now. She just started about a week and a half ago. So that, 2 weeks ago. So that was an important item when things are missing. Now that doesn't mean when they say an ID is missing that there's a reason for that. They just put it in the wrong bucket. And they got to find it. So we have a specific what I would say criteria which everything was put in. Every file was always submitted with 1008, 1003, credit explanations, income explanations, verifications. Everything had a specific order that you put it in. BODs, pay stubs, W-2s, tax returns. Everything was very specific. If you submitted a file to whatever company or underwriting to get it done, when we were banker brokering back in the day, it was always delivered the same. So it's kind of the same way with it now, but the underwriter gets to go in, we stack it, but the underwriter gets to go in and pick what she wants if she wants to look at something first or last. It was very, very structured. It still is structured, but it's a little bit different. Only because they know in the system, look at the section they want. All right, so very important, look to see how many pages are there, because in some of these, you're gonna see there's 2 blank pages that says left blank intentionally. If you don't have them in there, you're gonna get stiff for it. Okay, they're gonna look for it and may even say, can't give an underwriting determination because we don't know what's on those statements. We don't know if you have enough money because those statements are blank. Okay, right, where did I go with that? No, that's the copy. This is it right here. All right, so now you take a look at the first page or the next page. There's not much in here, but this is an actual bank statement to a file that's in here. So they have an account called Keep the Change. Every time they use the ATM card, it gets delivered. That's something that really doesn't matter to us, but I got to supply it. Next page. Again, most of it says keep the change. And then at the bottom, you've got withdrawals and other subtractions. ATM withdrawals, paid whatever it was at University High in Newark. And at the end of the day, maintenance fee is $5. And that's the end of that statement. There really wasn't much to it. All right, now we've got another bank statement, and that will be.
But anytime we have a statement that shows a transfer to another account, should we be requesting a copy of that statement?
No. If you're using money that's going from one account to another, so let's say you have a savings account. Normally, if you got 2 accounts with the same bank, one's a check and one's a savings, you need both. My line is, show me the money. I want all your statements. Okay, show me the money that you're using to do this transaction. You're going to need X amount for down payment. Let's estimate another $10,000 for closing. Where is the money? So if you don't have it, that means you didn't ask for it in the beginning. So plan on asking for all the statements, because if they transfer, most checking people keep just the amount they're using in their checking account. So you need the copy of the other account that's being transferred in from. Okay, if they're getting wire transfers, well, that would usually just be for pay. Most people's regular checking accounts aren't going to get a wire transfer. It's just their payroll going in. That's generally what is being deposited into their account. Now, July 19th, I'm trying to find which one that is. All right. Good enough. Pull 1, 2, 3, 4, 5, and pass it around. And this is a good one because this is an account that they really use more often. Okay. Same borrower, I'm almost sure. Yep, because they didn't white out the top page. White that out when you get on page 2. It's the same borrower. All right, so now it's your checking account. This is his regular savings. These people tend to keep no money here and flow most of the money in their checking account. Again, it gives you the beginning balance. Now, when you look at this, you also are playing detective. Because if you got a beginning balance of $400 and an ending balance of like $9,000, you know there's a lot of money deposited, and you already know how much they make, so you know, well, how'd they get the rest of the money? I only make $4,000 a month. So, but in this case, it's only $1,000 left over. You can see deposits and other additions is $23.42, and withdrawals is $1,500. Checks total $194. Now we're going to take a look at that. Again, page 2 of 8. Everyone look at the bottom. I know it's cut off, but it's 1 of 8. So 2 of 8 is really nothing, but you got to have it. 3 of 8 is going to show state of New Jersey deposit, which is obviously a payroll. Berkeley, and it actually says Berkeley Education, She works probably for the Board of Ed in Berkeley Township, payroll, and there's 2 of each. So the 2342 makes sense because they're all payroll deposits. Now, you can see that there's a lot of check cards. Doesn't really matter to me. I'm just looking for, make sure there isn't anything bad like NSFs. You can see they're all regular. Keep the change moves in. You know, you're just going to scan, but predominantly you're looking at that deposit section to make sure it all made sense. You look through here to make sure there's no NSFs because they may require an explanation. Page 5 of 8, withdrawals and other subtractions. You can see they paid the Elizabethtown Gas, Macy's, Bank of America card, and it also shows you the checks. Page 6. I was really glad they did this. Has nothing on it. Left this page intentionally left blank. If you don't have this page, you're going to ask for it. They don't know what's on it. That's why. We don't know what's on it. And then you got the checks. You're really, really only looking for anything on a negative basis or deposits you can't explain. Because you'd rather be able to go into underwriting the first time, okay? So while they're signing, if they've sent you stuff ahead of time, as you know, Don is like me, I ask for stuff. What I do is while I'm doing the application, I will tell them after my first call, I'm gonna send you a quick email. These are the items I need. I'll send them out. W-2s, 2 months bank statements, and we need 2 months bank statements, okay? Whatever the contract date is, you want the previous 2 months. That's what they're looking for to see where the money is. Used to be 3 months, we're back to 2. You're looking for large deposits. Oh, I'm sorry, I'll go back. I'll send out the email. All right, Bob, I'm gonna need 30 days pay stubs, last 2 years W-2s and tax returns, the last 2 months bank statement, show me the money. I actually use the one. Show me the money. All the money you plan on using for this transaction, give it to me. IDs, Social Security, driver's license. I just send a quick email. While I'm now getting it back, I'm writing his application. So now I have the documents. Oh, okay. He works over there. I've got the pay stub. I don't have to sit on the phone with the guy for 2 hours. I've got the information. We did the general conversation. I now put it together. And then I call him when I'm done and go, all right, how many kids do you have? Or how old are they? Because the tax return tells me how many kids. How old's Mary? Oh, she's 12. How old's Bob? He's 11. And I can finish off the app. How many years on the job? What's the phone number to the job? But I've got everything else filled in. I got the bank statements done. I've got the income. I've got the employment done. All my real work is done. Now I'm just filling in the blanks that those papers didn't give me. That's a good way to know that when he signs and sends it back, you're ready to go to underwriting. I now am going to take everything he's given me. I'm going to write my cover letter. I'm giving it to Ashley or Peggy, and she's going to get it submitted to underwriting and open. Anybody saw anything crazy in here? Okay, no. 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 Good job. What? She was supposed to be the second eyes on me over here.
There's page 2 and page 7.
I'll remember that for the next time. All right. Let's look at another one. Now, I'm going to pull a business one from another client. Now, 99 times out of 100, I'm going to try not to use a business account. And you're going to see why in a minute. There's 2 of them, so let's see what date I'm using. July 1 to July 31st. Do I have 2 for the same one? Nope. They have 2 business names. This is 2 different ones. So let me find it there. 17 and 4. Pass them out. Let me go. I think you're going to need one. She's got 4. All right. Let me go back again. Why the business bank statements are rough. while there was the whole upheaval over the last 3-4 years, any large deposits were being questioned. If you have a business, almost anything can be considered a large deposit. So we were having times where underwriters were going, source all the deposits, because they weren't wire transfers, they weren't pay stubs. We've now gotten through that, but they still ask for things that you may not want in there. Also, you need a letter from the accountant explaining that using the money out of the business account isn't going to affect the business. So if the business account has $30,000 in it and you need $23,000 to close, you're eating up 3/4 of all the money in that statement. Is that going to negatively impact the business? That you always call me. It's on the other line.
Hello?
That's funny.
This is not Smith Rita. This is her.
Kill it.
She's on her way to CBS right now.
So
They're not muted.
So take a look at this one. 4,000 ending balance or beginning balance, 100,000 315 deposits, withdrawals are 62, and checks 12. Net at the end of the month, 29,000. Again. All right, whatever. Again, page 2 is nothing. And it's funny, these are 2 different accounts. They both use Bank of America. I was hoping to get a different one because it's some different. Counter credit. All right, so what's a counter credit? You could have a counter credit. It doesn't have to be a business account. Does anybody know what a counter credit is? That's right. You went right to the teller and you made a deposit. That's 12,000, and it doesn't say check. I'm going to assume that's a cash deposit. Now, we all know he's in construction. He does snow removal. I widened this out, but he might go to a job and the guy gave him 12 G's to start the job. Could have given it to him in cash. But underwriter's going to ask. So I try, again, these are the reasons why I try not to use business statements unless we have to. Bank of America Mobile, 7,500. Bank of America Mobile, 15,000. Paychecks. Another Bank of America Mobile. So I'm going to assume that those mobiles is he's taking a picture of the check and depositing it. I don't have that feature, so I don't use it. I'm just taking a good guess at it. So his deposits pretty much make sense, but these deposits could be questioned by an underwriter. Even though I don't believe they should, they will anyway. So I'm going to try not to use it. Not only that, I didn't see any NSFs here, but you take a quick look, make sure everything makes sense.
When you say questioned by an underwriter, they just want additional backup, like additional support for them, or
What
do you have to
they
give?
they're used to looking at personal stuff. So if you've got deposits of this size in someone's personal statement, and they're not making $150,000 a year, you divide that by maybe 2 payments a month, they're going to look at it and go, what was a $25,000 deposit? They haven't, in my opinion, most underwriters haven't yet learned to disseminate and pull apart a business from a personal, especially if it's a small business. Where'd you get the money from? Where do you get the money from? I'm in business. My argument with them has always been, again, these are the quirks of the business where you got to try to get around using personal information, business information, and how they're supposed to look at it. So I'm like, well, who cares whether it was cash or not? Yeah, but what if he's laundering money? Well, my answer to them always is, look at the tax return. This is an average of $100,000 a month. He grossed $1 million too. You get what I'm saying? If you're grossing as a business $300,000 a year, and you got 100,000 deposits in 1 month, and a lot of it's cash, then I would question it. But if I'm doing on my gross receipts 800, 900, $1 million, and I've got cash deposits, and it's consistent, well, that means I get paid in cash. What do you want me to tell you? It's in there. He's paying his taxes based on what he puts in. But again, you can't tell people what to do after the fact. They've already signed the contract. So if that's where the money is, we're going to have to use them. but be prepared to understand what that means. And when you get the question back, I'm giving you the insight as to what they're going to ask you and why they're going to ask it to you. So it's a little boring and a little mundane, but the truth of the matter is you're going to have to get those questions answered. If you don't know what's on there and you didn't look at it, you're not prepared for it, you're almost in the same boat as the clients. So you want to look at these things and get some of your questions answered ahead of time. So I would look at the tax returns and I would go, please note, he has many cash deposits. Cash deposits seem to total about $100,000 a year, a month, in the 2 months that we have, and the gross in the business is 1.2 mil. Matches up perfectly. Now I've put the underwriter's mind in a light, because remember, when she's looking at it, she may not have looked at the tax return. She's going, what the hell is accounting credit for $12,000? That was cash. And they got another one. Now we got pictures. I want explanations. But if I made a note, she's going to go, hold on, and pull up the text. Goes, oh, it makes sense. He's in a business. He does landscaping. He might get paid in cash, so he's got business accounts, snow removal, and she'll look at that. If you don't give him a little insight, and he wasn't here at the beginning, I kind of describe this as you're the detective or the artist. You're painting the picture. The processor used to be the prosecutor putting together the case, and the underwriter's a judge. Now what we're doing is we're letting the judge make the decision first, and then the prosecutor's going, yep, that's a good decision. Here's why. Here it goes. It's kind of flip the tide over. But in essence, that is the way it works. You're painting a picture that your underwriter is going to make a decision on. So there's nothing crazy in here that I can see. I'm looking at it. I don't see any NSFs. You can actually get a flavor of the kind of business he does, who he's got to pay. I don't know if you noted this, but he does a lot of work with his American Express card.
Yeah.
He buys all the supplies, and that to me is important because this particular gentleman had a $60,000 American Express balance when I handed him the file. And I explained that'll be paid prior to closing because that's through the business. So the first time I handed in the file, he had $60,000 in American Express. Now he's got $70,000. He uses that American Express card. And does anybody have an idea why he would use his American Express card? Rather than his, there you go. He goes away on free, gets, a lot of people do that now. My wife used to work for a dentist. They do everything on an American Express card. He hasn't paid for a vacation in 15 years. He just uses all his points and stuff like that.
So in that case, do you have to provide a full statement, or can you provide, since you're not using the business account, can you provide a transaction history report showing that that credit card is being paid on the business account?
You need bank statements.
You need the bank
Well, if you're using bank statements, using bank statements. If I'm not using the business bank statements, they'll say that'll be paid. And then she may say, show me where the money is. And then you'll have to get the bank statement to show it. So in some cases, you're going to get stuck anyway, but you can't have a transaction. If you're going to show me where the money is, remember, it's all about showing me the money. So if it's paid on a regular basis, she can infer that it's going to be paid because it's in the business. I may just have to provide one statement to prove they have the money. Simple as that. You're not going to be allowed to do, they're going to want the whole statement. The printouts are good to get started. Really not, because they really want the rest of the statement because they want all the pages. They want to see the deposits. They want to see what goes on. So you're pretty much going to use it. In a case like this, you're going to need it. Again, I try not to use it if I don't have to, but when I have to, I have to. But sometimes I can pull the card and it says it's a business card. So it is what it is. And then they have assets. And one of these, I have even more assets in there. All right, so there's nothing negative. The daily ledger doesn't mean, and again, no one cares about his checks, but I was not even going to put them, but I had to prove a point and go 7 of 8, 8 of 8. If they're not in there, they're going to condition for them, and in some cases, that could be an issue. All right? All right, now we're going to pull the next business statement. There you go. Go around. Same account. Different guy, by the way, than the first one we looked at. All right, same account. Same guy, different business, same month, okay? You didn't get one? Here, right here. You got more? May 6th. Okay. All right, this isn't the same account. Normally I would do 2 months, but I wanted to show you different accounts. This one is a different business, same gentleman from the same time period. That one had a $17,000 balance, only $2,200 in deposit, 11,000 withdrawals, and 7,000 in checks. Again, page 2 is nothing but garbage, but you gotta have it. Oh, look. He pays his Mercedes-Benz service charges through there. Smart move. American Express, 7,000. Life insurance. His auto lease. Does it matter to me what he's paying? No. It doesn't at this point. I'm only looking at this from an asset point of view. I'm not providing these statements as proof of something in this meeting. In this meeting, we're just talking about bank statements, okay? There are reasons why sometimes I go, no, he pays the card through the business, and I got to prove it to get it off the debt. In this case, I'm just providing this for assets, okay? Yearly ledger balance, cards, intentionally left blank, intentionally left blank, intentionally left blank. I know it sounds crazy, but if you don't have it.
Why do they do that if there's nothing behind it?
I don't know.
Push that every
I
page.
really have no clue why they do that. I guess they want to waste paper. There aren't enough used trees. All right, same borrower. I'm pulling you a different type of account. Goes around that way. I should have given you 2. Same borrower. Show me the asset. Now, sometimes there's a school of thought, just show me enough to get me through the deal. But sometimes if the deal is tight, I want more. If you've got more, why? Because I'm showing strength of borrower. That's part of the C's on character. He's got 200,000 in reserve. This deal is actually a $600,000, 400 to pay off the mortgage, 200,000 cash out. Because the guy bought the house. This case here, the guy bought the house. Actually, he bought the land. He built the house, spent almost $1 million. It's worth $1.2 million, and he wants to get his cash back. So he did not hard money, but yeah, kind of like investment to buy the land. He's got 400 on that. He spent another 500 in building it, and it's worth about 1.2. So he's looking to pull out 200 in cash. So this actual loan amount is 610, because he wanted the 200. Actually upped it to 610. So I upped it so that he can pay the closing costs. 400's paid, and I'll walk away with 200,000 of his own money. So when you're pulling out that much cash, sometimes they go, "Oh, is the business in trouble? Do you need the cash? Why did?" Well, no, I put all my money into it. He spent all that cash to build the house, and it's a brand new house that they're going to move into. So
the appraisal on that is kind of like the most important, one of the most important.
Absolutely. It's got to come in at a certain, now, right now I have the appraisal because I'm using the alternative product called Veris on it. LTV, FICO score, use of funds, all play into the rate. Okay. Same thing with Fannie and Freddie and FHA. FHA, not so much, but Fannie, if you don't cash out, it changes the rate. If you're a high LTV, it also changes that criteria. With these guys, it actually changes it even further. You might get 50 bips add on to the rate, 20 bips for each different level. So in this case, I'm under 55% loan to value because it's 1.2 to 610. But if that goes to 55, certain things start to kick in. I may not be able to get the rate I want. Now I get another 30 bips. If it only comes in at 900, now I'm at 68 or 75%. That's going to change the whole deal in terms of numbers, but it is what it is. It's my favorite one. When customers go, "Well, how come the rate changed?" Because you told me it was worth 1.2. I did my numbers based on 1.2, and it's only at 9. So it's 300,000 loss. You went from 55% to 75% LTV. That's change. And then they want to cry, and then I go, it is what it is. I didn't tell you what it was worth. You told me. I would have given you that rate, and you told me it was only worth 900. Sometimes we go back to the appraiser and negotiate it and go, hey, here's 3 comps similar to the house in the area. I think you missed them, and we can kind of challenge the appraisal. But you guys know that only works if they're really screwed up somewhere. All right, so this, I asked for this account because I told them, you're looking to pull a bunch of cash out. Show me the money. You got any more? Yeah, I got this. This is an actual retirement account. There's 115,000 in it. Now, what's different in this account that there were in all the other accounts? Right off the first page. Most bank accounts are printed when? How often? What is this? It's quarterly. So, it would seem logical if I have one and it's quarterly, which means it's 3 months, I would only need one, right? Yeah, wrong. You need 2. Okay. Even though you're encompassing 6 months, they want 2 of them. They want 2 quarters. So you got to get the 2 quarters. And I actually have the other quarter because I had to kill the file and bring it back. So beginning balance 112, 115 cents. It's increasing. Take a look at the quick numbers, make sure nothing crazy looks at it. Basically, I'm only using this to show strength of borrow. That's it. I don't need the money. He's getting cash out. I only have it in there so when the underwriter looks at it, the first thing she's not going is, think about it yourself. Somebody comes here looking for money. First thing you say is, why do they need to come to me for money? Underwriter right away is going to go cash out, refinance. Let me take a look and see what's wrong with the file. They all want to make sure that they're lending to the lender's criteria. So they want to look at any negativity that may be there. You can look and see how it grew. You can see where the money is. No crazy withdrawals, no crazy deposits, and 4 of 4. And of course, the last page has nothing on it that's important. So I'm not using these funds for anything on this file, but let's say they were putting 20% down and they needed $80,000 to do the transaction. That's why I need this. I'm using the funds here to make it work. So
I use one for reserves.
exactly, you need reserves. Now, what's the problem with using this sometimes?
Right, you cannot take 100% down.
Correct. So, normally, if you're using the funds, what do we got to get?
The terms and conditions for withdrawal.
Say it again.
The terms and conditions for the withdrawal.
Where you get it?
Where do we get it? In the company itself.
What company?
Mutual fund company.
Insurance company.
You're going to get either from HR or from AXA. In this case, it would be AXA.
Also, you would have to pay taxes on it.
Huh?
You would have to pay taxes because it takes money out before it gets into
Exactly. Which is why they only allow you to take out a certain percentage. So even though we have $100,000 value here, he may only be allowed to take out
10,000 officially for house. 10.
I don't know. I think some of them. What you know for a fact? This one?
Unless he takes a penalty.
Right. You can take a penalty.
But you can take 10,000. You can take out
without penalty.
Yes.
But if we're doing, like I said, you need 80. He's gonna pay a penalty. The penalty isn't on his principal. The penalty is on the interest that he has. You can take out what you put in, right? Now you give me a look. I'm not going to pay a penalty on my principal if I deposited 50 to start the account. The penalty's on the interest.
Correct.
Exactly. So remember,
on the interest or what you took out?
well, let's say I'm taking out 80. You're only paying the penalty on the interest that you earned because it was deferred. You didn't pay tax on it while it was in here. So if I put in 50 to start the account, I'm only going to get paid on the interest. Penalty. First, you're going to, and really, it's a tax penalty. It's not really. They're just taking your money. You're paying what the tax would have been on the income at the time you earned it. That's really what the penalty is. Okay, so it's very important. Now we have teachers' funds. You got guys that are in the union, have money in the union accounts. They got firemen, policemen. They all have money that they can pull out. Many of those are pulled out how to avoid penalties. Come on, how do I pull it out so I don't have to pay a penalty? They mark it as a loan.
A loan to yourself, right? You can get a loan to yourself.
You're borrowing against your funds now, even though you've got to pay it back. Right. So what they do is they hit you up, and then you'll see your normal deposit, and then it'll hit repayment of loan. It's actually double payment. But what happens to our qualifying criteria?
Does that loan get added to?
It's a liability.
Why are you looking at me like that? You thinking?
Yes, I'm thinking.
Go ahead.
It's not.
I'm willing. He says they got to add it to liability. He's new though.
I say
She
no.
said the same thing. You
I
say
say
no, Kevin.
I say no.
Why? First say why. If you're gonna say no, tell me why. If it's against, you can say it's against.
Because you asked
I don't think you do.
the way you asked the question, that's why.
I'm just thinking logically, if you're taking out a mortgage for $500,000, but then you're also borrowing $100,000 from yourself, you gotta add that to the liability because
You
you
borrow from
gotta pay $600,000 back.
I didn't have to put it on when I did this, I know, so you didn't have to do it.
I'm just guessing though, but I don't know.
The loan is not going to be reported to credit anyway.
No, because it's not really a loan. So here's the answer. It's yes and no. Why? It depends on how you borrowed the money. Because you're borrowing the money from your own money, and you can easily say, take it from the pension and hit me with the penalty. Or if you left the job, they automatically pay it off.
Right, and I guess that's the key.
That's the key.
What happens if you don't pay it back? I mean, that's the whole.
That's the
that's
key.
The difference.
How do you pay it back? And if they require you now, if it's up against your own asset, you don't use it. Now, if I went out and took a loan on my house and use that money as a down payment on the second mortgage, I have to use that because there's nothing to take it out with. But because I have $100,000 in the account and I took $30,000 out as a loan, it's secured funds, and that money could be used to pay it off. I don't have to use it. Right in the guidelines. So you want to take a look if your ratios are tight, where the money's coming from, and what's the criteria. Because some places don't let you. But normally, like if you were to retire, for instance, my cousin was a fireman, Uncle Bobby. He always borrowed off his pension. Whether he bought a car, whether he bought a truck, he would borrow off his pension to go away, whatever it was. When he retired, they actually took that money out of his pension, wipes it off to zero, which is a case that we're talking about. Now, fortunately for him, they accumulate so many back paydays that he got a $56,000 check that went right back into it to clear it out. So that's basically the answer that you're looking for. What happens if you leave the position? What happens if you couldn't pay it? Well, they would just use your asset to deplete it, and it doesn't change your financial standing. Okay? So those are the cases. That's why it's important to get the answer on how much you can take out. Some people go, I get 30,000, I'm going to take out 30. No, you can't take out 30. All 30 isn't yours. So those are the things that are important to look at when you look at these accounts, and they're going to use them. That's why we really spend a lot of time looking at that. What else? That was it. Is that all of them? All right. So the questions on what we did so far. All right, so let's backtrack. These are the extras that we produce. I can submit to Dwayne later. You can put them on the website. All right, so everybody pick one. What are you looking for in a bank statement?
Large deposits.
Yeah, large deposits, any kind of,
Okay, what else are we looking for?
Balance on the account and who the account belongs to.
Perfect. What else?
All
What's important?
pages.
All the pages. What else are we looking for?
Any NSF.
It's all
anything
negative.
strange, yeah.
Give me a positive thing we're looking for.
a lot of cash.
Why?
Because, why a lot of cash?
Why am I looking for the money?
Because not to close with.
To make sure we have enough cash to make it. Again, this is part of your job, not bringing in a deal. A guy wants to buy a house and put 20% down. He's got $9. Why are you buying the house? People, you're going to be surprised, right? You all had knuckleheads.
I just had a couple of, at least two from Trenton. The only money they had was 2,500 in their deposit savings account.
And they're trying to buy a house.
Yeah.
Now, did you talk about the program?
I did, but then will it be enough?
Do a seller concession.
Could have been, yeah.
That's how you negotiate it. So let's back into assets. So we have a program that you get 4.625 on your 30-year fix, and the state, through HMFA, will give the borrower up to 4% for down payment and closing costs. So in FHA, we only need 3.5%. So we got an extra 0.5% that they could use for down payment or closing costs. But they only have 2,500. So then what we could do is negotiate when they're buying the house, a seller concession. The seller's going to pay the closing costs. So someone goes, all right, I have my house listed for 195. Instead of going in and saying, I'll give you 180, say, I'll give you the whole 195, but I need $8,000 for closing costs. That again is what we do in helping the borrower get qualified. When we do our pre-approval, that information's in there.
So you'll get involved in the actual negotiation of the selling.
I get involved in the pre-approval and speaking to the realtor and saying, if you show them a house that the sellers won't pay money towards the closing costs, there is no loan. So you're actually getting involved in the conversation with the realtor as to why this deal works. But the realtor's thrilled. Why? Because they didn't have a client yesterday, and most people go in and offer less. Well, my suggestion is offer the full price and take the discount and closing costs.
Gotcha.
It doesn't hurt the seller in any way.
And when the boiler blows up, what do you do?
What do you mean?
I
Is it
mean,
closed?
if it's closed,
No, did the loan close?
no, if the loan is closing and you have only
Oh, you mean the boiler blew up beforehand?
after?
After I closed?
Yeah,
I don't want to seem crude, but it's closed.
I know, but this poor person, goes bankrupt. They don't have money.
Yeah, but how many people do you know in that level buy a house and have a lot of money left over?
I know.
So what's the difference? You buy a new car, your kid out of college, you lease a car and you put your $800 down, you put your $800 on the insurance, you got $12 left in the account. And somebody hits you, and you got a $500 deductible. Are you in the same boat? Are you in the same boat?
Bad luck.
Same thing. Yeah. Bad luck. I can't do anything about luck. We got you in. We helped you get the down payment. The seller paid towards you. And by the way, in your case, I had 2,500. So what are you complaining about?
That's right.
Didn't you just say I had 2,500?
Mm-hmm.
There
So
you
now-
go. You can get a boiler for guess what? NJNG will come in and put that boiler in, and you'll pay $100 a month for the next 10 months. How do I know? I did it. All right. So look, there's all ways of looking at stuff like that. But again, we're looking for enough money to close. They don't have enough money to close. They got to have the ability to save during that short period of time that you're doing the deal. Where are you getting the money? I'm getting a gift. Now let's talk about that stuff in the assets. So my first conversation is don't deposit anything to the account until you talk to me first. And Kevin could probably answer because I remember you had a couple crazy deals.
Yeah.
People go, oh, my brother gave me 10,000. Yeah, where did he get it from? Oh, I don't know. Well, now you got to start showing where it comes from. Now, normally you don't need to show bank statements from anybody outside the deal, but I got to prove that my brother had the ability to give me the gift. And you have to have a gift from a family member. They do allow close relationship people to give a gift. FHA come out with that. Employer can give you a gift. You can get a gift from your church. Okay. But if your family member is giving you a gift, what they want to make sure not happening that you're taking $10,000 that you had in cash and you're giving it to them for them to write you a check back. Although we do that all day long, right? There's ways around that. We won't go through the ways around it. We're just going to explain what needs to be done. So we have a gift letter. It says I, Bob Jones, is giving my brother, Tom Jones, not the singer, $10,000 as a gift and doesn't need to be repaid. So the keys are who's giving the gift. It's usually a blurb in the gift letter from Fannie Mae and FHA. Count number, how much your gift is, roughly when they're giving it, And the big key is, does not have to be paid back. Okay? Does not have to be paid back.
Even if it is paid back, you can put that on. It has to say it's not.
Yeah, you don't know.
Don't say,
There's
now,
a lot of.
it's funny you say that, because a file I'm doing for Donna right now, the guy says to me, my daughter's lending me the 2,000, do I need to do a gift letter? I said, well, if she's lending you the 2,000, a gift letter is ridiculous. There is no loan. It either is a gift or not. And I worded it so that I protected myself. She has to be giving you a gift. If it's not a gift, it will not qualify. I didn't say we have to say it's a gift. Remember, you got to protect yourself, because almost everything is in writing now, whether it's a phone text or whether it's email. So I was very specific to say, this cannot be a loan. If it is a loan, it will not qualify. It needs to be a gift. So if you're going to have to pay it back, we can't use the funds. I was very specific in what I said. He has to read between the lines. Okay? And the forms have to be filled out. Because as far as we know, if you got to pay it back, what do I have to do? I got to include it in my ratios. You can't borrow unsecured funds. So we'll go back again, because it's all about assets and money. So let's say I'm short. Don't make any height cracks. I'm short money, not stature. So we have a guy who's got great credit. He's got a line of credit that he can pull $15,000 in cash on his credit card. He's got two of them. Can I use that?
No.
No. Why?
Secured by his house.
It's not secured. It's a credit card. But if he needed $15,000 and he's got a Harley Davidson and it's worth $25,000, he can borrow $15,000 on that, and I can use that money as a down payment closing cost. But what do I have to do at that time? Now let's go back to, I got to qualify with the payment. Okay, so that's a case where I'm going to use money, but it's on an asset of mine that I can borrow from, and I'm going to use that money for the down payment. Maybe I've had guys sell their Harleys to buy the house. It caused a divorce later on. That woman made me sell my bike to buy this house, and now blah, 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 blah. The boiler blew. He got real mad. Never know. No, I'm only joking, but the guy was a little upset that she made him sell a bike. A $25,000 bike. He got 20 for it. You remember these things as you go along. But you can, if you've got assets, you could take money out of your house to buy a house. You could have a shore house and take money from there to buy it. I'm going to use that money and this money to buy a bigger house. Whatever the answer is, it's got to be secured funds. Okay?
When you use a gift letter, the date on the gift letter should match where the resources are?
It's not that important.
No?
I mean, the gift letter should be dated after the application and before the gift is given. If they've already given a gift, then the dates will match up, because we're going to say, the gift I gave, not going to give, because there's a line you circle and says, I will give or have given. And if you have given it, then you put the date of the check to show that it was. We need a copy of the check. We need a copy of proof of the ability to give it. And this is how in the old days, we used to get around someone saying, look, I've saved money. I've got $10,000 in my safe downstairs. I'm going to be honest, a lot of people have some money in the house. You know, God forbid the world blows up. What do you need? You need money. What are you going to do?
The world blows up.
Well, the world doesn't completely blow up. It just blows up a little bit. People still think money's worth something for the first 3 months. You know what I mean? They can read all the Holocaust. They got all the crap. Anyway,
Look what happened
we
in
used
Puerto
to give
Rico.
the money over.
They
They
can't
can't
take the money out of the bank.
take the money out of the bank. So their world blew up, but money's still king. Cash is king. U.S. dollar is still going to buy you something. So the point I'm getting at is we would turn around and say, okay, because FHA and Fannie Mae, the government guidelines are, I can't ask someone that's not signing on this loan for things, for their bank statements, their tax returns, unless they're part of the application. So if you're giving me a gift, the best way around it was, I said, look, when you put the money in the bank, have your person at the bank write a letter on Bankhead saying that, please be advised that Miss Mary Jones has in excess of $10,000 in this account, savings account number 1297423 as of this date, and the date's on top, and then you sign it. That's how we used to get around it in the old days. Now it's a 50-50 shot. You can usually make it work. Some days it doesn't. But the point I'm getting is that's the only way I can get around someone putting money in the account. Now, if you're working with the borrower, you definitely want to coach them through doing it, because a lot of them, this guy who I just told you about, I emailed him specifically 2 weeks ago. Do not put any money in your account without talking to me first. He emails me this morning. My daughter put in the $2,000 in my bank account. Or do I need to do? I told you not to do that. So now I got to go back and go, how did you put it in? Did you put in cash? Did you write a check? Did you do a wire transfer? Because you put in cash, that's a problem. That's already, now that doesn't work. And if it's in a bank account that he's got the rest of his money in, I'm not going to be able to use that bank account. So we may have a major problem. And I could pull up the email now. 2 weeks ago, I emailed the guy and said, do not put any money in your account without talking to me first. And I specifically referenced gift. So you're going to, and what's the other thing? We're going to backtrack because he's here. Credit. Go ahead, Kev. What don't you do with your credit when you're doing a mortgage?
Don't apply for more credit.
You had a client the week of closing, because we have to pull the soft pull, opened up a car loan.
Yeah, got a new car and match their credit cards up by going on vacation.
Drop their FICO scores under 620, 619.
Really?
Drop 40 points, 41 points, right?
642 to 602.
We had to get it back up to 620 to close. Delayed his closing by 3 weeks.
It's just close.
For a number of, yeah, he just closed that
Oh, yeah.
a week ago on Monday, right?
Yeah.
Right on Monday. he closed.
Tuesday.
Tuesday?
It was a
So-
holiday Monday.
You want to make sure that you tell people, do not open new credit, play with your bank accounts, let me get the snapshot, tell me everything. You now become their financial priest. You're now got to guide them through this crazy, litigious process to get from here to here without blowing it up.
So I get the credit piece, and I apologize for asking.
No, we're all asking questions.
I get the credit piece, but what is, so 2,000, go back to your example of you put $2,000 and you put it in cash. What is the issue with $2,000 in cash? Let's say you have $100,000 in the account. So I understand that they don't want to use that 2,000.
Exactly.
Then you can't use that account?
If you put in cash and I can't source the funds. So now where a donor can say, well, I don't want anyone to see what I have. Well, I have to prove that you had $2,000 to give them because you gave them cash. I have no idea where the cash came from.
I was going to say 2,000 on $100,000 accounts like that. Not
We don't know what their account is.
You just said
Right,
Yes,
I was just saying.
but well, now I'm backtracking. I'm
You're
going now
saying you can't use that account. You're just saying you can't use that $2,000.
until I can. No, I won't.
wasn't Fannie and Freddie defined like a large deposit is 50% of the.
But hold on, we're talking about a gift.
Oh, good.
So here's what I have to do. So in my mind, I have more of the story. So let me just throw the whole thing at you. Oh, they're from Brazil. Okay. So now we've got money, and he has a business in Brazil. All right. So what do I have to do to make that $2,000 work? The first thing is, as soon as we see it, I got to go, all right, bro, you just deposit $2,000 in cash. Now, I still have to source the funds and do a gift letter. So if you give me cash, I can use it if I can show that you took out of an account $2,000 and you didn't take it out 6 weeks ago. I took it out on Tuesday. Here's the statement, and I put it in. So here's a statement showing the money, but now I'm asking somebody else to show me their bank statement. And I've had people go, I don't want them to see all my money. Right. Okay. But I could tell them, well, they won't, but I will send it directly to me if that's the case. And I've had that case. I gave them a story where the family, the Italian family, was given the gift. An old lady grabbed me and she made me come to the kitchen to help her to bring the coffee. And I'm like, okay, I'll help you. And she goes, them sat on my beach. She said, I don't want them to see all my money. They're going to take it and spend it all. So old lady, I says, I'll help you with it. Don't worry. But then you know the rest of the story, right? You remember? Tell them. I'm doing the application. And you see on the back of the application, go to page 4. And we have a series of questions there.
1003.
Yep, the 1003. I mean, G, line G, this page. Now, this couple just got married. They're young. It was about 25, 26. She was about 23. I was 28 at the time. I was still a baby in the business, 4 years in. So I go, listen, as I still do today, I'm going to say no, but if I say something and I'm wrong, stop me. Grab a chair, Bubba.
On my phone, actually, tried to die on the 10%, so the recording's gonna end.
Just walk in. What are you doing? Yeah. Well, wait. There's a couple that's got to be. No, these aren't the ones I'm using. You can use these.
Sure, you can use mine. I've
But
frozen now.
You blanked them? Yeah, you get
I-
staples?
I did.
You scribbled it up? Yeah, okay. Check them all. Make sure they're all cleaned up. So, line G, are you obligated to pay alimony, child support, or separate maintenance? Now, you got to understand, I'm sitting at a table. The father's sitting there, the mother's sitting there, the daughter's sitting there, and the new husband's sitting there. And I go, no. And I read the next line going, is any part of the down payment? And as I get to that part, he goes, excuse me? And I go, what? He goes, child support. I'm paying child support.
And the wife didn't know about it?
Nobody knew about it.
Oh, man.
He had like a 2-year-old daughter, 2 or 3-year-old daughter. And
He should have brought you in for coffee to tell you.
listen,
Yeah,
why he said that right there at the meeting in front of, she starts screaming at him. She went up and got a knife. I had to turn around and go save him. And then by the end, the whole conversation, to the point where I was laying under the table, I didn't even want to hear it. I'll kill you. It was a nightmare. I said, listen, needless to say, no, you can't see that. It's the names I'm really concerned about with what account number, because he's setting it off. Literally, you're going to be in situations and that's going to happen. You're going to find out people didn't know who was married. You're going to find out you will be sitting. You guys are new. I sat in an application where the wife was complaining why he was a borrower and she was a co-borrower. And I had to go, normally I put whoever makes more money as the borrower. Traditionally, the man would make more money, but I could put you as the borrower and him as the co-borrower. It doesn't matter to me. It's just a piece of paper. Literally, that was like a 30-minute argument. You know who that was? D'Amico's wife. He lived around the corner from us. His son, his son plays ball. Literally, she fought with me for 30 minutes or argued and complained why she wasn't the borrower. So I'll make you the borrower. Hold on. They wrote her name in and flipped it all around. Didn't matter. Give them what they want. Don't worry about it. All right, bank statements. We're looking for the assets to close the deal if it's a refi. If it's a purchase. If it's a refi, if you don't need any money to close, you literally don't need a bank statement, okay? Usually you want to supply one because they like to know what account you're going to use to make the payments with. So sometimes an underwriter will say, could you just get me a bank statement so we know they have a checking account and it's not. But I've done refinances where I didn't have a bank statement. Some people don't even have accounts. Still to this day, they pay everything in cash. They'll go over and pay cash. Sorry about that. So you want to make sure there's enough money. You want to look for large deposits, and then you want to look for cash deposits. Sometimes the deposit will say cash. You need to explain a large deposit, even if it's a check. Where'd it come from? Great excuses. I lent my brother money and he gave it back to me. Great. Can you show me the statement that you pulled the money out of to give it to him? One of the things I tell people all the time, this is a great business to come up with good answers to fix things, but many times you're going to be asked to prove it. So if I'm going to say, I lent money to a friend, okay, can you show me that you lent him the money? And in some cases, it's a true story, and they go, yeah, look, 2 months ago, there's the $10,000 I pulled out, and he gave it back. Okay, anything like that, you got to prove. These are all the types of things you're going to put on your cover letter to the underwriter. I break down my cover letter as I go. I give them the basis of the deal. They should always pick my cover letter first and look at it and go, purchase, 80% LTV, using their own assets or a gift. And I mark the deal, and then I start writing the notes. Anything that's abnormal or anything that's out of the way or anything that needs to be explained. You'll note that on a bank statement, there's a $10,000 deposit. It was a repayment of a loan he gave to his friend. If you see the April bank statement, you'll see the $10,000 coming out. I'm not giving them a reason to go, aha, I found something here I don't like. I'm giving them the information up front because it changes the mindset of how they're looking at it. It really, really does. Think about it yourself. When your kid tells you, you have kids, you have kids, but they're little. Yeah, well, I'm sleeping over Bob's house tonight. You don't need to worry about, picking me up. Bob who? Where are you going? Can I have Bob's parents' number? Because I want to make sure you're going there, because I've told my parents I'm going somewhere and I didn't. Right? We've all done that?
Not me.
Yes, we were definitely bad.
I never lied.
You've never done it.
Great joke. I know you didn't. He's a terrible liar.
No, I'm just
His brother, on the other hand,
gonna lie you straight.
he got like straight through his
face and
teeth
you
and
believe
tell you, Dad, that's a blue desk. I told you it was blue. Nick makes a trip. Him, you didn't lie very well.
Not that I don't lie, but I don't like it.
Didn't want to get busted, right?
I don't like to lie.
I give you the death look. Right? Well, how's that look go? Okay. So, gifts, very, very important. Walk people through it. If you don't know it, somebody here will help you with it. That's not a problem. Pension funds, union accounts, all things like that. You got to find out how the money comes out. You can hand it in. Don't expect to use 100%. You're good shape if you stick with 60% or less. They need this money. They're really only using 15,000. There's 50,000 in the account. That's not going to be a problem. But the underwriter is going to ask for a copy of the conditions on pulling the money. What's the conditions? They want to make sure that they can pull it out. Because when we sell the loan, they're looking at it with us. Where'd the money come from? We can't just put stuff in. It doesn't happen. It's got to work the way we put it in. And if it doesn't, we change the documents and put them what we need. Questions? As you can see, this is a lot of the back office stuff that we need to fix the problem, put it together.
So no NSF is allowable?
Nope, you can have them, but they're going to need to explain it, just like a credit lien. So they'll say, if they see more than, I don't know if you have to explain each and every one, but if they see multiple, it kind of becomes an issue. But why you're always using the account if you don't have any money in it? You got NSFs. Sometimes you get an automatic hit that you can't control, and someone used some money. You know what I mean?
Can you use custodial accounts?
On owner-occupied property, yes, but we've had 2 issues. On investment property, you can't use a custodial account. Doesn't make sense to me. The rule doesn't even make sense, but you can't. So let's say over the course of 10 years, you put into your kids' accounts where your name is on the account, 25,000, and you're buying an investment property, and you need 15,000 out of it. You can't use a custodial account. That's on investment property. We've had that come up twice in the last 2 months. Jerry had one, and I think Donna had one, or did you have it? One of us had it, but it came up twice.
You can use them on, if you're buying a house.
If you're owner occupied, yeah, because what they're saying is, there's no benefit to the person whose money you're using, even though you put it in there. And my argument is, wait a minute, I'm buying investment property. I'm gonna take that money and the profit we make, that's what's going to their college education. Instead of leaving it there at 0 interest, I'm buying a property that I'm going to use, but that argument didn't work. I tried it, Jerry. I wrote the letter for Jerry and submitted it, and it didn't work. So you can't use, I couldn't even find the rule in the book, but it has been confirmed. You cannot use custodial accounts on investment property.
I'll wrap it up on your, it's gonna die any second.
Okay.
So just.
Any other questions on assets? Good. All right, we're good for today. I think that'll work.
Okay,
I'll
so I
take
have
more questions. Now you have one.
Just
So
thinking.
close it out.
That's all right.
I'm out. No, go ahead.
If you have
So she's got 10,000 in her account. He's got 10,000 in his account. They're both bringing 5,000. Whatever he's willing to accept. All right, both of you bring me a certified check for 5,000, or I need certified funds for $10,000. He can bring 2. He can bring 8. We really don't get involved in it. But the key is, you have to use the money that you say. We actually had a closing that got canceled because the borrower used an account he didn't have on our application. As a matter of fact, I don't remember whose loan it was. Be careful. There you go. I'm trying to remember whose loan it was. The borrower showed up at the closing
From a different account.
with funds from a different account. You remember? It was about 4 months ago. I'm going to say it might have been Donna's.
It
But-
sounds familiar.
But the borrower came to the closing with money that was not any of the monies on the account. It was a completely different bank check from a different bank. And because we have to show, they have to send us back the package. And the first thing they got to do is send us a copy of the certified check that they use. And they were like, where did this come from? And we had to then turn around and re-verify the money and redo the closing the next day. It was like 2 days later. Like it was a Wednesday closing. We had to get the stuff, put it back in. Everything else was the same. We just had to verify. They had to give us 2 months bank statements of the account.
Did they add that account to the application?
I had to add that account to the application. I needed 2 months bank statements, and I had to put it in the file. And then we redrew the docs and reclosed.
So even though, in that case, even though they may not have needed the money that was in that account, since they used money from that account to
It's gotta be
close the deal,
verified.
they have to show that.
Because they could have taken 10,000 cash and put it in that account
Right.
and wrote out the check, but they really didn't need it. They had the money in the other account. I'm going to say it was Mike's deal. I got to remember whose loan that was. I'm going to ask. I think Mike was in on it. Don't be overly concerned. Like you asked a couple real good questions, but it was about the closing. They have nothing to do with us. Don't get involved. I'm going to do this as a general now. Don't get involved in scheduling closings. Don't get involved in giving closing dates. Don't get involved in how it gets there. Once you're at the level that we've got to clear to close, say our closing department will contact your attorney or the attorney, and they will structure everything. Because them two now got to work on the numbers, and then the attorney's now responsible to get what he needs from them. Anything you say may and can be used against you.
Mhm.
And they will say, you told me I can close on Thursday. You told me I could use a check. I had a closing where the guy brought a personal check because he was going to float the money for 3 days, thinking he's got 3 days. And the attorney goes, and he tried to tell him I told him. And then he told me the attorney told him. And I sent the attorney the emails back and forth. He was like, that motherfucker. They chewed him out because we had to cancel the closing. Okay, so guys, people will do that. They will hang you up. It's always your fault. You know, that's what, did you go to the closing?
No, fuck all, no.
No? They will throw you. Listen, people are people. They'll hug and kiss you and everything, and they'll thank you to death, but there are a certain amount of people that will blame you for everything. They'll hang out to dry. They'll say it was your fault. You know, like in your case, that lady was pretty cool because she realized it was her fault.
Yeah.
I never really blamed you, but some people, I've had people, are you kidding me? That's your life. I didn't take it by a car.
Same thing, I told her not to do anything.
Exactly. So those are all stupid little things. That's why when people tell me, no, you told me that, I go, okay. You know how I know I didn't tell you that? Well, how? Because I've been doing this for 35 years and I say the same thing to everyone all the time. I don't change my speech. There's no reason to change. The money's the money, the income's the income, the assets are the assets. There's no reason for me to change what I tell you. So I tell everybody the same thing. Why? Because I'm not that smart. I can't remember if I said something different, so I don't say anything different. If I tell you this is what it was, when they go, oh, you never said that to me. No, I say it to everybody. Do not take any credit. Don't put any cash in your account, and don't do anything in this realm without talking to me first.
So just to back up one thing you said, so you work the deal with them, you work the application, you get all the information in, once you have it in, you're gonna go to the closing, but you're not scheduling the closing. There's a closing department.
As most new loan officers should go to every closing for the first 2 years. Why?
Okay.
There are 4 people at that table. There's more than 4. There's 6. Well, 5. At the closing, your borrower's closing is your borrower. So if you're there, you can kind of answer questions if needed. Usually there aren't any at that point. There's their attorney, who obviously does real estate closings. So if you're there, he's going to be like, wow, you came. Well, yeah, because it's new. I really don't attend mine. I don't have the time to do it. There's the guy who sold the house for that person, if it was a sale or a purchase, or sold them the house. Then there's the other agent, because these 2 guys are looking for money. They go to the closings all the time because all they're looking for is a check. When they talk about the borrower, they don't care. The Falcon one, they called up that this guy was all he wanted. I sell 40 houses a year. I really don't need the money. Then why are you calling me 4 times? I told you there's no issue with the file. The problem was he had a credit inquiry and we had to verify it and took out a credit card. Nothing I can tell you. It's not my fault. It's a soft pull. Happens all the time when people don't do what we tell them to do. Well, I really don't. Stop telling me you really don't care. I've been on the phone with that realtor in PA 5 times. 5 times. His realtor wasn't as worried as that guy was. Needless to say. So you got both realtors, the other attorney, and your guy's attorney. So there's 3 people you can impress, as well as that attorney. And then you always want to say, hey, by the way, if anyone in the family is you got any kids? That's a great way for new people to. You now have 4 people that no matter what happened in the transaction, the money's there. So you can and you're going to get all their cards.
And who's at the closing for a refi?
Just your borrower. I mean, if you're going to go there, you usually may have referred it to someone so the attorney's already warm and friendly, or a title company. You really don't need an attorney on a refi.
Okay.
You're using a title company. And it's a good time to say, hey, you have any friends and family? So it's kind of a good day because they're happy, you're happy. It makes it work, especially if they're getting cash, that type of thing. So, yes, that works out well. Right? Then neither one of you's made it, right? All right, because it wasn't PA?
Yeah. But I did speak to him before and right after.
Yeah, everything went well at the closing.
Yeah, and the closing agent called me too.
Yeah, what'd they say?
We didn't know where to send the package.
So, yeah, tell them to call the person that sent it to them.
I did.
It's because that's what you emailed me. Where did you send a package? I said, get to the person who sent the package.
It's ridiculous.
I don't know who gets it. I don't know if they're using an outside service, if they have a different office.
No, you was supposed to go back to Carrie. She was waiting for it.
Normally,
Our agent.
right, they scan it and send it back right the way they get it back in. So again, you want to refer, especially at closing, I refer everything back. Who'd you get the package from? Oh, the girl. Yeah, that's exactly who you want to speak to because I could give you the answer, and if it's wrong, you're the guy that's wrong. Even if you're not wrong. Oh, he told me. No, I didn't tell you. What do you mean? I would never tell you. Remember what I told? I never give a closing date. I might say I'm shooting for Friday, but I can't guarantee a date for you. I'm not doing the closing package. I can't control what's on that department's schedule. They might have 15 closings scheduled for Friday already. So, there's a number of people that are involved in getting that done. All right? Sounds good. Any other questions? Anything from the closing? Yours went well?
Yeah.
He's got a great story. And I told him he had to be careful with this. He had a closing that the husband knew that they were doing a loan. But what was very odd is that the husband had nothing to do with any of the application.
She
did it all.
He didn't know that she owed $160,000
Of their money to the IRS.
Wow. So she had to come clean the week before the closing.
Because she actually said, does he have to be there?
Yeah, because that's why she had power of attorney on this whole thing. And she did it all.
And I said,
the
no.
closing agent made him come.
Why? Because the same thing I told you. He's got to sign off on the cash out. He's got to sign off on all of it. But, a husband and a wife can sign for each other legally. Mm-hmm. Your wife can literally go out and open up accounts in your name and you really can't sue her. But if you have a case, and I was involved in a case where the wife came to me knowing I was in the business, the husband did that. took out a second mortgage and ran away. Couldn't put him in jail for it, but kind of can go back at him for it because she was rights to the money as well. But you have to sign documents noting that even though you're not on the deal, so let's say you have a husband and wife, and her credit is poor or his credit is poor, we're qualifying with only one, they still have certain documents that they're signing off on as well, that they know that this is a refi, they know that it's cash out. There's documents they have to sign because of that. She was ready to do this whole deal. As soon as he said to me, can they do power of attorney? I'm like, why? Is he away? No. I immediately knew something was up, and I told him. I said, something's up. Tell me to file.
And that his wife and him now owe $100,000 to the IRS.
Ended up being 160.
160.
160?
160.
What did his face look like when he found
I
out?
don't want to look. He was a good guy too.
He said, "I love you, honey."
He
He
took
was
her
good.
out.
He was actually in good spirits when we closed.
Oh, gosh.
Wow.
Listen, there are things that you're going to see and hear and get involved with that you're going to be like, holy crap. It is amazing. It's never a dull day around when you're doing mortgages. All right, folks. Thank you very much. If you got any more questions, we're there. Next week is a meeting. And then we'll pick up after that. And again, I'm going to be working with Dwayne on filming these things so that they'll be available. All right, so this is more. Not too boring, right?
No, it's good. It's good. I hope I was.
No, never. No. I would prefer questions because, I'm trying
That's
to do
how I
this.
learn. I mean,
I'm doing this for about an hour and a half, from 10, knowing who shows up a little late. So I do a little fluff in the beginning,
Yeah.
answer questions from before, and then I plan out a certain amount of conversation because I want you to absorb it. If I try to do too much,
Yeah.
see, now you'll remember this,
Right.
and you got stuff to look at. But if I try to run through too much at a clip, you're going to be like, what? You're not going to remember. I've done this class in a week, and someone has gotten a loan on Monday. And when I say the class, I mean from start to finish, and they'll go, what do I do? I just did it for 5 days, literally on a Monday.
Yeah.
They have no idea what to do.
That's funny.
It's just the way it is.
Yeah.
People like, because you never did it before. All right, I got to give him this.
So you said you have a meeting next month. Do you want me to come to the meeting?
Yeah, absolutely. Your part. No. Come to the meeting on Monday.
All right.
Hear, who's got what going on, what problems are, what good things are.
All right.
And we'll
Good
go
deal.
from there. And you get to understand the whole system. Good deal. Hang if you want. Whatever you got going, stick around. You don't have to overly judge. It's only training.
Yeah.
All right, where's Dwayne? I got to give him this. All right. So now I get to go do my regular job.
All right. Yeah, so I'm gonna head out because I have a call early this afternoon anyway.
Cool.
I'm still even though I'm on
And if you have any questions
leave,
about anything,
I have even though I'm on leave, I have some calls and stuff like that. Perfect. I'm taking care of. But anyway, this was great though.
Yeah.
Great.
We're gonna keep doing it, and you'll hit the next one.
All right. I'll see you later. See you later, guys.
All right, I don't see him. All right, I'll hold this. That was your one, right?
All right, guys, I'm recording out. This course is all over. I'll leave the recording. Sit down today.
Hold on. Yeah, you took your glasses last night.